This is getting really worrying. Yesterday, the Reserve Bank cut interest rates to virtually nothing, 1%, a new record low. That's even less than the inflation rate. It's a bit like free money now. And that is already one sign of strife, that our economy is slowing fast, unemployment rising, 5.2%. And if that wasn't enough, the Reserve Bank Governor, Philip Lowe, last night gave a speech virtually pleading with the government to now do its share in stimulating the economy. How about spending more, he said, or maybe more on infrastructure, something, anything.
Monetary policy does have a significant role to play, and our decisions are helping support the Australian economy. But we should not rely on monetary policy alone. We will achieve better outcomes for the society as a whole if the various arms of public policy are all pointing in the same direction. One option is fiscal support, including through spending on infrastructure. This spending not only adds to demand in the economy, but provided the right projects are selected, it adds to the country's productive capacity.
This seems highly unusual. Here is a Reserve Bank governor who is publicly campaigning, has done it for a long time now, for the government to take what he seems to think is urgently needed action to save the economy. Joining me is Adam Creighton, economics editor of the Australian newspaper, and someone who's actually worked for the Reserve Bank. Adam, it's great to see you, mate.
Thanks, Andrew.
Is it common for a Reserve Bank governor to go around the country campaigning for the government of the day to change tack?
Well, look, certainly we have seen Reserve Bank governors speak a lot more than they would have, say, 10, 20 years ago. The Reserve Bank, of course, is independent formally, and the sheer volume of speeches that Reserve Bank officials give has increased very dramatically. Philip Lowe, I think, does speak a little bit more freely than Glenn Stevens, his predecessor. I don't think it's necessarily a bad thing. I mean, I think we want our senior officials to be as honest as possible. I don't necessarily agree with him, of course, on this call for the federal government to spend more. I mean, I think the subtext of those remarks we just heard then from Phil Lowe is basically that the bank isn't really very fussed about the budget returning to surplus, because, of course, as the government is returning the budget to surplus, and, of course, that is meant to happen next financial year, this financial year, I should say, the Reserve Bank, of course, is trying to stimulate the economy. So if you like, the fiscal policy and the monetary policy are kind of working against each other at the moment. At least that's how the Reserve Bank sees it.
Well, I think that's true, because the government has made a big deal of returning the budget to surplus this year after 12 years. It doesn't want to spend this extra money. The governor says, well, listen, the economy demands it. Does the economy need extra spending?
Well, look, the reality is we're already spending a great deal on infrastructure, and I think a couple of points worth making. Firstly, the federal government itself is only responsible for about 1% of infrastructure spending, so there's really not a great deal that it can do. I mean, the states obviously are largely responsible. New South Wales and Victoria, I think, about 2/3 of all infrastructure spending is their responsibility. And indeed, as a country, I think we have roughly doubled the amount that we're spending on infrastructure over the past 5 years from the previous 5 years, which I think is a good thing. But the point is that we are already doing a lot. And the risk, of course, is if you do more and more, the quality of the projects is not so great. That said, of course, the federal government now can borrow at 1.3% for 10 years. So that is the cheapest that the federal government has ever in all its history been able to borrow for. So certainly it is cheap to do new projects. But, you have to have the workers too. I mean, it's all very well to say, let's build all these tunnels and roads, but if you don't have the tradesmen in the country, then you just simply bid up the cost of these projects and they don't even happen.
And, of course, as we saw under the Rudd government, once you start spending urgently on programs, you throw it away on trash. But, Adam, you were puzzled about something, I'm puzzled about something, and I know much less about the economy than you do. So help me out here. The governor's... The Reserve Bank has said, listen, the economy is going to recover soon. It's not that bad. Things are going to pick up. Spending is going to pick up, blah, blah, blah. By the way, panic. You've got to spend more. What's happening here exactly?
Well, look, I think the problem is the Reserve Bank, and indeed central banks all around the world, they have this system called inflation targeting, which I think very few people know about. And it basically says that when the inflation rate is low, the central bank has to try to stimulate the economy to bring it back up again. And as you mentioned, I think earlier, the rate of inflation in Australia is quite low. It was 1.3%, I think, over the year to March, which is very low by historical standards, and it's been below the Reserve Bank's target now for about 4 or 5 years. So it's increasingly looking like the Reserve Bank is not actually meeting the target that it set, the promise that it's made to the government, which is to keep inflation between 2 and 3% over the medium term. And I mean, I would argue that this system needs to be dumped, because I think if we've learned anything since the financial crisis, it's that the link between inflation and wages and interest rates is extremely weak. But central banks around the world are still they're still conducting themselves as if it's a strong relationship. And that's why you see central banks all over the place slashing their rates. And of course, this boosts house prices, it boosts asset prices. There are all sorts of unintended consequences, but they are just so determined to lift that rate of inflation back to target. And I would say that the side effects are far worse than the possible benefit of a lift in inflation.
Yeah, later in the show, I'm going to be talking about one of those terrible side effects, which is that part pensioners and privately funded people on their privately funded super are suffering hugely because their assets simply aren't earning a decent income anymore. But here's another thing I don't understand about the Reserve Bank governor, right? So he's going around saying the government's got to do something quickly, urgently now, and yet he's also saying, and we have to too at the Reserve Bank, so we've slashed interest rates twice in the last 2 months, which is almost unprecedented for years, even though at the same time he's saying we don't think this cutting interest rates does all that much. So why is he doing it?
Well, look, because it's the only lever they have. And I think privately the Reserve Bank would think that, these rate cuts are, a kind of a necessary evil, because, as I said, they have this inflation target and they haven't intellectually worked out where to go to after this. That's all they have. That's the ideology, if you like, the theory that governs central banking. And so they're doing it very reluctantly. They know that it will push up house prices, that it will increase mortgage debt, and those things aren't necessarily good. I mean, we are the second most indebted country in the world from a household point of view, just behind Switzerland. Credit to households is 120% of GDP, which is about twice what it is in many European countries and the UK. So that is a problem, but that debt doesn't really figure in central banks' models. Remember, it's central banks that said the economy was great just before the financial crisis, and then we had the biggest crisis since the Great Depression. So, I mean, you mentioned earlier that the banks' forecasts are always optimistic. Well, I mean, all central banks basically are always going to be optimistic, because if they say anything otherwise, then it suggests that they're not doing their job.
All right, and just finally wrapping it up, how much trouble are we in? As I said, unemployment has gone up to 5.2%. House prices have crashed in the big cities in particular. Wage growth has been next to nothing. So what's the big picture?
Well, look, historically speaking, Australia's doing fine. I mean, the rate of inflation is low. There is wage growth. There is GDP growth. We are arguably richer than we've ever been. I think there's a tendency to panic when actually, Australia's in quite good shape. And ultimately, we are captured by what happens around the world. We are a small economy, really. We're 25 million people. We're smaller than Texas in population. So we're just like a cork on the ocean. So we just have to hope that the global economy keeps growing, and then if they keep growing, so will we.
Adam Creighton, as usual, terrific stuff, mate. Thanks so much indeed for your time.